Hey everybody, how is it going today? Welcome back to the channel. In this video, I'm going to be doing my M1 Finance Account Portfolio Review for the month of September 2021. Now, if this is your first time watching this series, the objective of this portfolio is to reach an account value of over $100,000 and $500 a month in dividends by the end of the year 2025. The rules for this account goes as follows. I make two $100 weekly contributions with an extra contribution on days where the S&P 500 closes down more than 2%. Now, usually that contribution is also $100, but sometimes I send more depending on the market conditions. The reason why I make that extra contribution is because studies show that can increase your portfolio's return by double digits over the long run without adding much more money. Now, I will link an article in the description on that if you would like to learn more. All right, so here we are on my M1 Finance Account Portfolio homepage. In last month's video, the account was worth $28,444, and as of this second, the account is worth $31,915.62. In last month's video, the account had a money-weighted return of 76%, and it has risen to 94%, so up a little bit over the last month or so. And total dividends earned for this portfolio are $483.96. So if we click on the monthly tab, let's take a closer look at the monthly numbers. We can see the account is up $1,161, and it is up 3.85% over the last 30 days. And I also earned $48.21 in dividends over the last 30 days. And by the way, if you are thinking of starting an M1 Finance account, I do have a referral link down there in the description. If you use that link, we will both get the startup bonus. So that is always nice, getting a little bit of free money. But let's click back on the All tab and then scroll down and take a look at my holdings. My biggest holding, of course, is Tesla, followed by Square, Snapchat, Simon Property Group, Goldman Sachs, Microsoft, JP Morgan Chase, Apple, Uber, the ARK K Fund ETF, Waste Management, Illumina, Dutch Brothers, which was a new holding last month. We have CRISPR Therapeutics, Baidu, O Realty Income, Disney, Skyworks Solutions, Health Peak Properties, the Vanguard High Dividend Yield ETF, Carnival Cruise Line, 3M, Palantir, Grow Generation, Magellan Midstream Partners, Dominion Energy, the Vanguard Total International Bond ETF, the ticker symbol BNDX. We have Verizon, AT&T, LTC Property Group, and Alibaba. And if we scroll back to the top, let's actually take a look at the monthly numbers, my biggest gainers and losers for the month. So I'll click on that monthly tab and look at my biggest gainers for the month, and it is Tesla, followed by that new holding, Dutch Brothers. Alibaba and Baidu have come back from the dead, or at least over the last 30 days they have, followed by Realty Income Corp and the Magellan Midstream Partners. And if I click that around, take a look at my biggest losers for the month. The biggest loser, of course, is Snapchat. I'll get into Snapchat when I get into the charts, but Snapchat came out with some earnings, and Wall Street did not like them, so they are taking a pretty big hit, but they are only 2% of the portfolio, so that's not that big of a deal. CRISPR Therapeutics has been taking a hit over the last 30 days or so. Carnival Cruise Line has. Palantir had a pretty decent sized pullback after almost getting over $30 a share, so it was a little bit surprising to see Palantir having such a poor month, but it looks like Palantir is already starting to turn it back around, but we'll talk about them when we get into the charts as well. Followed by Grow Generation, and then AT&T. AT&T has been a lagger in the portfolio for quite some time. I contemplated getting rid of AT&T when it was over $30 a share, and man, I wish I would have done it, because the more I look at AT&T in this portfolio, the more I wish it wasn't in there. I think I probably will end up getting rid of AT&T on a bounce, but I'm going to follow them just a little bit longer and see how this stock acts. I hate to sell them at the bottom, but and I don't think AT&T is going to go bankrupt. So obviously this thing is going to bounce eventually. But AT&T definitely has been a weight on the portfolio. But let's get into the charts right now. All right, well, the first group of charts I want to look at are the market averages, and I want to look at them on a monthly time frame basis. This is my long-term portfolio, and I just want to see how the long-term trends are still shaping up. As long as the long-term trends are still intact, I don't want to make any changes. I don't want to get worried about the market from a long-term perspective until the market gives me a reason to get worried. And as long as we are above all these moving averages and in a nice uptrend, there's no reason to get worried about your long-term holdings. And when I zoom in a little bit closer here, we can see that the NASDAQ X did come down to that 8-period exponential moving average this month, but it had a sharp reversal, and now it looks like it is on the verge of breaking out to new all-time highs. So I definitely want to be in stocks. The only time I want to get worried is when we start to break below that 8-period exponential moving average and hold below it. Now I have to come to a decision when it does that, whether I want to start lightening up if I think it's going to be a longer term correction, or if I want to add more aggressively, which that's what I usually end up doing, is just adding more aggressively. But it all depends on how the market is doing. But let's take a look at the S&P 500 next. And if you take a look at the S&P 500, pretty much the same story, holding above that 8-period exponential moving average. In fact, it found support at it earlier this month and is now busting out to a new all-time high. So the S&P 500 is very healthy. No reason to get worried about that one. If we take a look at the Dow Jones Industrial Average, we can see the same story as well. It looks like the Dow is also busting out to new all-time highs. So as far as the market goes and the overall long-term trends, I think it is very healthy. Unless we get a break below these moving averages, I am just going to sit tight. But let's take a look at the IWM real quick before we get into those individual charts, because I have been looking at this chart for a long time. And I think if the IWM ends up breaking out of this consolidation to the upside, the market is going to be off to the races. In fact, let me click over to the weekly chart so we can see that consolidation a little bit better. You can see it's been stuck in this range for almost a year. And I think if the IWM ends up breaking out of it, which I think it will, I think that is going to be very bullish for the stock market, and I am looking forward to the day we get that breakout. I'll probably end up putting on even a little bit more, putting a little bit more money to work if we do get that, but we'll have to wait until that confirms. But let's get into some individual names. All right, so right now I want to get into some of the biggest gainers and biggest losers of the portfolio over the last 30 days. Take a look at their daily chart and see if there's anything to be worried about, or if there's any adjustments I need to be made. So I'm going to start out with the 5 biggest gainers for the portfolio over the last 30 days. And the first one, of course, is the star of the portfolio, and that is Tesla. And we can see Tesla is having a monster day today. It's up almost 13% as I am recording this. It's having a huge gap up into new all-time highs. The move is starting to get a little bit parabolic, so that is slightly concerning for the short term, but the fact that it is breaking out to new all-time highs very aggressively, that is a great sign. And as long as Tesla can hold above, say, $920 over the next couple of weeks, I think there's a great chance that this thing ends up going on a very big run, and that's going to be great news for the portfolio because it is the biggest holding. And just going to the weekly chart for a second, it kind of looks like we are in this part of the move. I don't know if Tesla's going to duplicate this, but if it does, I mean, this could be another massive run for Tesla. This happened back in the middle of 2020. It went up super far, super fast. Now, I'm not saying that that is going to happen again, but if it does, I'm not going to be complaining at all. But I just thought looking at the weekly chart, it looked very similar to what we got going on right now. So hopefully that does play out that way. But let's go back to the daily chart, and let's take a look at the number 2 biggest gainer for the portfolio, and that was Dutch Brothers. I think Dutch Brothers was also one of the biggest gainers last month, and this stock is it's just defying gravity. Normally when a stock IPOs, you'll see a move up and then it'll kind of go into a little bit of a slow fade. I still think we're probably going to see that, but you can see Dutch Brothers just exploded out of that IPO. It had a decent little pullback to the low 40s and now exploded right back over $70 a share. So Dutch Brothers is still screaming. I'm still of the opinion that Dutch Brothers will eventually fade down to around, I would say, the 30s, maybe even into the 20s. And if and when that does happen, I'm going to up my target on Dutch Brothers. So it's only 1% of the portfolio right now, but if we see Dutch Brothers fall below 40 or 30, I'm going to get more aggressive, probably raise raise it up to 2 or 3% of the portfolio and start buying more aggressively at those levels. But definitely Dutch Brothers, very popular stock right now, and for good reason. Those coffee chains are super, super popular. So a lot of people are excited about being shareholders in this company. And man, I think it's probably going to be a great investment over the next 10 years. All right, the next one I want to talk about is Alibaba, which was number 3. And Alibaba has been getting crushed over the last year or so. So seeing a good bounce in Alibaba makes me think that we are pretty close to a bottom. It remains to be seen. So I'll be keeping a close eye on Alibaba, but definitely a nice bounce off of this bottom where it got to under $140 a share. But as of right now, it's up over $176 a share. So hopefully this is the bottom in Alibaba and we can start moving up to approach that 200 period simple moving average. I'm thinking we are getting pretty close to a bottom. You never know with these Chinese stocks, but if it was, I'm glad that I added more aggressively when the stock was under 160. And this could be a big gainer for the portfolio if, those Chinese stocks did find a bottom and, we can get past some of these issues that we're having with the Chinese stocks. But the next one is the other Chinese stock in my portfolio, and that is Baidu. I was adding Baidu pretty aggressively when it was under $150 a share. It didn't stay there for very long, so I didn't get a whole lot. But you can definitely see Alibaba is above that 8-period exponential moving average and headed towards that 200-period simple moving average. So Baidu actually looks like it could be bottoming as well, especially since it's gotten above this price level right around 168. So the fact that it got above this last pivot right here makes me think that Baidu is probably making a bottom. We'll see if it holds. You never know, especially with these Chinese stocks. But as far as the chart goes, it's looking pretty good at the moment. And the number 5 biggest gainer is O Realty Corp. So this is a realty investment, or this is a REIT, a realty investment trust. And if we back it out, we can see that it's definitely been making a pretty nice little rounded bottom, and it looks like it's breaking out to a new high today. So it's actually up over 3% at the moment. And as far as the daily chart is looking, it is looking very strong. So I was adding a little bit more when it broke below $66 a share. I didn't realize we were going to get this kind of a move off of that 200-period simple moving average, but you never know. But that's why you want to buy at support, because sometimes you can get a pretty decent move off of it. But O Realty Corp looking very good. Now let's get into the dogs of the portfolio. And the biggest dog of the portfolio is, you guessed it, Snapchat. Snapchat came out with earnings a couple of days ago, and they got absolutely thwacked. They came in below expectations, and when you trade at a multiple that Snapchat does, you cannot afford to be missing your earnings. I know they blamed Apple, saying Apple's privacy rules, laws, whatever you want to call it, affected their ad revenues, but when you trade at a rich valuation, there is no excuses usually, and Wall Street is punishing them accordingly. Now, I think this is going to be a buying opportunity in Snapchat. I think, actually, when you look at the earnings were pretty darn good, and they're going to be profitable next quarter or the quarter after at the latest. And they are still growing at a substantial rate. I think they're going to be a pretty decent-sized player in the augmented reality market. So I think this is going to be a buying opportunity. I'm adding it to my M1 at these levels. But another thing about Snapchat, if I zoom in a little bit, I'm thinking if they can get above $56 a share, this is going to be a pretty good short-term trade for me. If they break above 56, I would expect them to bounce up close to this trend line, and that's going to be a pretty decent sized move. So I plan on making some money on that one on a short-term trade in my individual account, not in my M1 account, of course. That is only for the long term. But I do think there's a very nice short-term swing trade setting up at Snapchat if we can get a break above 56. So I'll be keeping a sharp eye on Snapchat. The next biggest loser in the portfolio is CRISPR Therapeutics. And man, looking at this CRISPR chart, this thing is ugly. If I wasn't so bullish on CRISPR's future, I would not be touching this thing with a 10-meter cattle prod, because this is just has, long, slow downtrend written all over it. But I'm going to use that, that weakness in the stock to add to the my position in CRISPR, because I do think CRISPR has a very bright future, and I'm going to take a shot on it with a small part of my portfolio. And I'm going to take advantage of the weakness in CRISPR. But the next biggest loser for the month is CCL, Carnival Cruise Line. And Carnival Cruise Line had a pretty decent pullback from the break above 25 that it had a few weeks ago. And it's looking like it's getting weaker. Once it broke above that 200 period simple moving average, I thought, the weakness was probably going to be behind it, but it just continues to get weak. Now, I think Carnival Cruise Line is not going to go bankrupt, and I do think that they are probably going to be at least a $50 stock in the next couple of years or so. So I plan on to continue to accumulate Carnival Cruise Line at these levels. I'm not super worried at the moment. Of course, I'd love to see this thing going the other way, but I do think Carnival Cruise Line is going to end up being a pretty decent long-term investment, so I'm going to sit tight with Carnival Cruise Line. The next biggest dog was Grow Generation. Grow Generation, man. This one has just nasty chart written all over it as well. If I wasn't so bullish on Grow Generation's future, I probably wouldn't be touching this one either, but I am taking advantage of this weakness in Grow Generation, adding to it because I do think that Grow Generation is going to be a big player in the cannabis sector that should grow quite substantially over the next decade or so. So I think Grow Generation is positioned well to take advantage of that growth. So I'm sitting tight in Grow Generation. And then the fifth biggest dog in the portfolio was Palantir. I mean, this thing is volatile to say the least. It is always up and down in the portfolio. But looking at today's price action, you can see this thing is trying to break above that 50-period simple moving average. And if it does do that, I think we could be ready to test $30 a share again. So Palantir, I am very confident in that position. So I am certainly using this weakness to add to my Palantir position. I think Palantir is going to be a fantastic long-term investment. So I do not mind one bit seeing weakness in Palantir.
All right, guys, well, that's all I have for this video, so I'm going to end it right there. But if you have any questions about any of these stocks, or if you have any other stocks you want me to take a look at, please leave them down there in the comment section. I will get to them as soon as I can. If you enjoyed the video, please hit the like button for the YouTube algorithm and subscribe to the channel if you haven't already. Thank you so much for watching my video all the way to the end, guys, and until next time, take care.